Just Good afternoon, Chair Santos and trustees. We'll kick off the presentation on slide 4 with the quarterly snapshot. And this dashboard view was created to provide a quick recap of the total fund to the board. A few metrics to highlight on this slide will include the public market fees for the growth category, which was a 6% year-over-year decline, or approximately $6 million in annual fee savings. The next is the batting average of 41%, which represents the percentage of our managers that outperformed their benchmark. And during a quarter where we saw the global equity markets decline by 16%, surprisingly, our growth and hedge fund managers delivered and make up primarily of that 41%. And lastly, the persistent low tracking error of 2.3, relatively for the trailing 36-month period, that has been consistently steady. And that's just another testament that staff continues to monitor and mitigate risk. Next. With that overview, we'll move forward on a review of our asset allocation. And we closed the fiscal year with $70.4 billion. And as a refresher, this is a snapshot of our new functional asset allocation structure that was approved last year. First, 2021, the first is the creation of a 5th functional category, overlays and hedges, which consists of our cash overlay program and our currency hedge mandate. And then next, within the risk reduction and mitigation functional category, we have a discrete 5% new allocation to long-term government bonds. And just a final comment on the policy weights. So on July 1st, 2022, a couple months ago, we had our final half-step implementation into our asset allocation plan. And so over the next fiscal year, we expect both our over and underweights to further tighten over the year. Next slide. This slide is our performance summary page. And for the quarter, the total fund declined by 5.9%, but it beat its policy benchmark by 200 basis points on a net of fees basis. And for the fiscal year, we fared even better by outperforming by 470 basis points, with both growth and credit generating strong excess returns. If I could draw your attention to the cumulative return chart at the bottom left, there you can see a clear turning point at the beginning of 2021, where the total fund has been consistently generating separation from its policy benchmark. And as of the end of this fiscal year, we've accumulated in excess of 800 basis points of excess returns over that 3-year period. Next slide. This slide presents our contribution to return. So this is referred to as our absolute return attribution because it doesn't compare the results on a relative basis. It just uses the weights within our total plan and the return that was contributed by that functional category. So you'll see from at the functional category level, it was mentioned that possibly without the overlays and hedges composite, we might have been produced a negative fiscal year-to-date return. So the single positive contributor for the quarter was the overlays and hedges category in a tough equity and bond quarter. So all other functional categories were negative, with the growth category being the main detractor. It accounted for roughly 80% of the total fund's net return. And not surprisingly, on the far right side, you'll see that the MSCI ACWI IMI passive account, which is our largest account in the total fund, was a top detractor. This slide is a relative return attribution. So it identifies the sources of excess return and helps us to better understand the results of our active investment decisions. So in contrast to the prior slide where here we see all categories contributing positively on a relative basis, and the main drivers of the fund's overall total value add were the large selection effect in growth at 1.01%, and embedded positive interaction effects within both growth and real assets. And for reference, the interaction effect can be thought of as the amplification or dampening in negative cases of the selection effect based on our allocation decisions. So I'll just give a quick example of that. So if we have an outperforming manager and we actually over allocate to that manager, then you'll see an amplification of that positive interaction effect of the selection. Here we present our risk versus return scatter plot. One interesting observation to highlight is the positive Sharpe ratio but negative information ratio for our real assets and inflation hedges category. Both metrics are indicators of risk-adjusted returns, but mathematically very different. Just for reference, the Sharpe ratio compares the return of investment to its risk. So in other words, the higher the investment Sharpe ratio, the more returns it's going to offer relative to its risk. The information ratio, on the other hand, focuses just on the alpha component and primarily evaluates the skill of our investment managers. So ultimately, the higher the information ratio, the more consistent that they're producing excess returns on a risk-adjusted basis from our managers. And the last slide finally is our full reporting structure of the total fund, including all the underlying composites that roll up to each functional category. And I just wanted to highlight two key takeaways for the fiscal year period is that later when you review this slide, you can see that all of our functional categories beat their policy benchmarks. I thought that was pretty impressive feat. And then two, while we're in that fiscal year period, private equity and illiquid credit were finished at the top of our leaderboard, and they doubled. At the 1 year return, they doubled their assigned benchmarks, more than doubling it. So I thought that was pretty impressive too. And kudos to that team, or those two teams. And with that, I'll turn it over to Tara to cover total fund risk.
I have a quick question on that. The private equity, how much of that reflects any kind of lag in terms of pricing?
Yeah. So since these composites roll up to the total fund, and ultimately we need to produce that headline number, it does follow the accounting hard close of 5th business day. So those valuations do have a quarter lagged implication.
So it's 1 quarter lagged.
Yes, and the benchmark is lagged as well. But we do have a new performance system, Solovis, that does cash adjust, and we do have an independent live view side where we can kind of get the best available kind of real-time estimates of performance and valuations.
Afternoon, Chair Santos and trustees. I will go over the total fund forecast. For the fiscal year end. At the top, you can see that the forecast total risk is at 12.9%. Increased market volatility that we've seen has driven that number up incrementally each month over the last several months. The active risk relative to the policy benchmark is at about 1.4%. And that has remained fairly stable around this number, plus or minus over the last several months. It's consistent with what John mentioned for the tracking error. The top bar chart breaks down that 12.9% total risk by asset class. And we see that growth is making up about 80% of that risk due to the exposure to the volatile equity market I just mentioned. The bottom of the slide decomposes risk by factor types, and we see graph that private equity factors were the largest contributor to active risk. We'll see that number decrease in July. As John mentioned, the final strategic asset allocation targets went into effect. And so we'll continue the factor type information on the next slide. So this chart, we decompose risk by factor groups as well as by asset class. The sum of the bars that you see here add up to that 12.9% mentioned before. Looking at the colored bar in the middle for real assets and inflation hedges, it has exposure to equity factors in the turquoise blue color, the first color, a bit of fixed income, which is our tips, and commodities in the next couple of colors, and then as well as private real estate in the pale blue color. So within each of the asset categories that you see, the subcategories are represented when we break things down into a factor makeup. Next slide shows LACERA's active risk of about 1.4%. And we break that apart into allocation and selection. You can see in the bold numbers shown on the table, excuse me. The majority, as expected, is coming from selection. For allocation, we see changes there when there are shifts in our strategic asset allocation. when the final targets went in July, we'll see that the allocation risk contribution will move even lower. The next slide shows a total fund broken out by geographical region, and this breaks apart both total risk and active risk by region. Both total risk has increased quarter over quarter across all regions shown. Monthly within the CIO report, we do have a breakdown by country, and so that's even more granular, so you'll always have that in-depth view of our geographic exposures. Lastly, for the risk portion, we show stress tests that are run on the total fund. The top 10 worst case scenarios, historical scenarios are shown for LACERA. The worst historical scenario was the GFC, or global financial crisis, back in 2007 to 2009. The GFC makes up the top 3 worst case scenarios. So portfolio and benchmark estimated losses are shown at the bottom of the table, and they're also charted in the graph at the top. And in 8 out of 10 of these scenarios, or the majority, LACERA would have less loss than our policy benchmark and would fare better than the benchmark. And at this time, I'll turn it over to Dale Johnson, and he's going to go over our climate portion.
Good afternoon, Chair and trustees. So this slide provides a snapshot of our approach to addressing ESG factors and climate exposures and the high-level metrics utilized in evaluating LACERA's ESG and climate profile. As trustees are aware, we've been using third-party ESG data and analytics to monitor the public market managers and LACERA's portfolio on certain ESG profiles where the data is available. The charts in the middle of the slide are an example of how we are using the data where available again to gain insight into the ESG and climate profiles of our portfolios relative to their benchmark and to similar mandates. This analysis provides 2 primary insights. First, we can identify concentrated exposures, areas of potential risk, and opportunities into the portfolio at various levels, such as the functional asset class or individual portfolios, for assessing the fund's overall ESG and climate profile. For example, in the first table, you can see here that their overall global equities portfolio is less carbon intensive than its benchmark, with the carbon intensity of 164.5 compared to 173.1 metric tons of carbon emissions per dollar of sales for the benchmark. In the second table, you can see that a couple of mandates in our risk reduction and mitigation program functional asset class have fairly different profiles relative to each other for a very similar strategy, but interestingly, they have a higher carbon intensity than the global equity portfolio. Second, the data and analytics provide a quantitative profile of our external managers' approach to integrating ESG and climate factors in their investment process, which supplements our qualitative assessments of how managers are identifying and integrating ESG factors as presented in the ESG score on the manager scorecard. For example, manager 1 in the second table happens to be rated a 4 on a manager scorecard, reflecting an advanced level of integration of ESG and climate factors into its investment approach. In another example, such as in the third table, we can see that the manager has a higher carbon intensity and climate value at risk, or CVAR, than its benchmark. A higher carbon intensity companies generally have higher value, potential value of loss of value due to policies that it would be enacted to reduce emissions to limit global temperature rise to 2 degrees. This analysis provides discussion points with our managers to understand that how they are integrating climate-related analysis into company valuation and the portfolio construction process. Currently, we can evaluate the climate profile of our public market investments and real estate portfolio and engage managers on how they are taking into consideration certain ESG factors as part of their portfolio construction. We are pursuing several approaches to expand our coverage of climate data for the private markets assets to provide a more comprehensive total fund view of climate risks and opportunities. We'd be happy to take any questions.
Thank you. Any questions? Comments? Hearing none, we move them forward. All the other reports are for information only. Those for staff review.
I don't think I have anything.
Items for future agenda items. To the order, roll call.
Mr. Knox.
Great conference. Shout out to the staff. John, incredible job. And also for the AV setup was really terrific for the first time of something of this magnitude. Thank you.
Thank you. Mr. Green.
Great conference. Thanks so much. I agree with the AV setup. It's Joe Kelly's like the great Oz up there on the screen, huh? Like 10 feet tall. Really appreciate Linda putting this all together and John and the whole team. The planning started 8-9 months ago. So I know there's a lot of moving parts that goes into it and really appreciate it. When we were talking about the investment beliefs, I was smiling because I was thinking that was the focus. The first time we talked as a board about investment beliefs. So it's amazing. Come full circle. We have such a great staff, investment team, not to mention a really great board that believes in the investment beliefs. And just we've come so far as LACERA. It just makes me really proud to be part of this team and the group that we have. Lots of gratitude to everybody. I'm hoping we could move back to being in person. We could do this more often. So just thanks everybody for your help.
Thank you. Mr. Kehoe.
Thank you. Great audiovisual setup. Me being remote, I was able to fully participate and watch everything, and this actually worked out really great from our end. So this hybrid format actually worked well. Once again, I apologize for not being able to be there. But once again, great topics, a lot of stuff, drinking from a fire hose. I definitely appreciate all the information that we were given and the topics. And I'm still depressed from yesterday. The presentations from yesterday were tough, but they were important for us to have as board. So appreciate all the work from everyone.
Thank you, Mr. Kehoe. Mr. Jones.
I'll echo the kudos to the staff. Realize like what a production that this is on front of the stage and behind the stage. Also for all the presentation materials and things ahead of time. And for me, when I first joined the board, it was all via Zoom. And while I've run into a few people at conferences, I got a chance to meet a lot of people for the first time yesterday. And so I can appreciate now the full height and dimension of some of you all on the screen than I couldn't before. So so it was much more depth. And equally as important though, I just love being a part, being a public servant and being a part of a community of people who are really interested in preserving a benefit and protecting a benefit for people who are working very hard on behalf of a lot of people here in this community from that perspective. So just kudos again to the staff, and I appreciate the opportunity to fellowship with everyone. So.
Thank you. Mrs. Jones.
Thank you for the wonderful conference. I already complimented Linda on all the efforts that are obvious to the eye of how much work went on behind putting an event like this together. So thank you. I learned a lot. As the comments already been made, it was basically taking water out of a fire hydrant and trying to capture it all. There was a lot of great information. I also appreciated having LACERA staff be involved with this guest speakers as well. So I appreciated hearing comments from both sides. And so thank you to all the LACERA staff as well. And I'm already going to ask for apologies because I, like Mr. Jones, met everyone through Zoom. And so if I see you again, I probably will not remember your name. So I'm asking for apologies already so that when we meet again, and I'll go, now tell me again, what was your name? But it was really good to meet everyone in person. And I feel like this is my first time in school when, you know, you meet all of your classmates and then you try to remember what their names are the next day. You just can't remember. But it was so good to see everybody in person. And having the opportunity to be a part of this is actually for me pretty life-changing. I have, you know, taken just the thirst for investments and knowledge to like another level in my 20-year career. So I'm on fire for investments now. I even force my kids to listen to me about investments. So this has really been a great conference. So thank you, everyone. And all of your efforts are so appreciated. Thank you.
Thank you, Ms. Jones. Mr. Kelly.
Thank you very much, Ms. Jones. I'm Joe Kelly. How am I doing? I thought it was great. Thank you to the staff. It's really great to have staff present, and also to Makita as well, because they had really significant value. But I appreciate everything everyone did. Thank you.
Thank you, Mr. Kelly. Ms. Sanchez.
I also want to shout out to the staff. John, this was an exceptional lineup of not just topics, but also presenters. I think it was really, you really, you know, took all that pandemic energy and put it into this moment. And so thank you for that. And, you know, I've been lucky that and honored to have watched a lot of this process over the course of my tenure here. And I think it is wonderful that we are at a point where we are kind of, you know, tweaking and considering and getting back to reflection things rather than inventing them from scratch. And so, you know, we sit on the efforts of people well before me. And I think it's easy to forget that there was a lot of work that went into that first draft and second draft and third draft. And so I very much appreciate that. I also am very happy that we did this in a hybrid format, because I think that it does create an incredible level of inclusion. You know, when things come up, you know, pre-pandemic, I fought very hard just for a teleconferencing policy that now feels so antiquated and outdated. And that was 2019 when I got that approved. So it is amazing how different the world is in terms of being able to allow people to not just be a part and be a fly on the wall, but to be able to raise their hand, you know, and in Joe's case, their virtual yellow hand, that and be a real part of the conversation. And I just am amazed at how much the world has changed. And at LACERA, it has been incredible, and I think a very, very good thing. And so I thank, you know, Santos Kryman, you came in kind of right at the beginning and had to live the experience of tumult and change and turmoil. And I think you've done an incredible job of stewarding our organization through that. And, you know, John Grable and his team having to deal with the operational complexities of that. So, you know, not that it's over and not that we're in any way done, but I just want to take a moment to reflect that this meeting really reflects how far we've come as an organization in the last 2 years. And I want to thank you all for your efforts there.
Thank you. John?
Thank you, Linda. Thank you, trustees, for all the positive feedback. What I'll say is the LACERA org chart says investment division. I like to say the investment team, and the team isn't possible without every member of the team. So thank you, teammates and colleagues. I think that all the feedback some of it may have been directed at me, but it's for everyone. So thank you. The other announcement that I'll make is sitting to my left, John Kim is a newly minted FA3 or investment officer. We just completed a search for an FA3 in portfolio analytics prior to John becoming an investment officer. He was a senior investment analyst in portfolio analytics, and this new position, John is very deserving of it. And LACERA, the investment team, and all our members will benefit by the increased responsibility and all the capabilities that John brings to the job.
It's just very nice to see everybody in person, meet some new folks. Great to be back.
Santos?
Which one? I'm joking. I just wanted to recognize John and the investment team. Kudos to you all. It's wonderful topics. Learned a great deal. I had the opportunity to be at the ALADS fundraiser on Monday. And it was interesting because the questions that were being asked, when I was meeting some of our members that were retired as well as active members, the one thing that they always asked about was the investment portfolio. They didn't ask about their pensions. They didn't ask about, how do I retire? What do I need to do? They just really focused in on investments and, is the money going to be there when I retire? And they always tell me, make sure when I retire that you safeguard my funds. And I think that this particular conference demonstrates the depth of the investment team and the importance of the investment team. So we're going to start reaching out, going out and meeting our members where they want to be met. And so I just wanted to express to the investment team that your work does not go unnoticed. And it's an important function for every single member, quite frankly. And so my team on the pension side and my executive team are here to support you all with everything that you need in order to be continuously successful as we move forward and make sure that the fund continues to grow in the positive direction. And so I also wanted to recognize the trustees. I think that with your leadership and the vision that you all had 2016, 2017, I think has contributed to the growth of the fund. And now that we're talking about tweaking things and making things better and improving them is a testament, quite frankly, to your willingness to look at the materials and provide some insight and guidance to John, and of course, the input that the staff makes and that John makes and the decisions that he makes are quite important and reflects on the how well the fund is doing at this particular point in time. So I just want to say, John, thank you for your partnership, and thank the investment team for everything that you all do, and the trustees, quite frankly, for your stewardship and the guidance that you provided over the last few years. And I say that not only as a CEO of LACERA, but also a 33-year county employee. 29-year county employee. 3-year.
Thank you for that correction.
LACERA employee. That's important. Let that reflect the record, right? Thank you. So thank you all. But thank you.
Steve Rice. And Chair Santos.
Thank you. Great conference. Tremendous speakers. Like Ms. Jones said, I really appreciate the fact that the staff, many who I have not met until we got here, I'd seen you on video, but it was wonderful to see the staff and the speakers, and it's very impressive to see how our staff, how knowledgeable our staff is. And that becomes evident when you interact with the speakers. That's something very precious to me, because yes, we are on the board, but you do the work. You are the ones who have to negotiate and